Hello and welcome back to my channel. My name is Harleigh, food blogger, content creator and overeater. In this video I'm going to be talking through how I bought my first property, a flat in London at 24 years old. As this video will be quite long, I'm going to put in the description the timestamps, the different sections that I'm going to be talking about, because not everything in the video is going to be relevant to everyone and some people might just want to refer to or refer back to certain points. I do have loads of notes on my phone in case I'm like looking down and stuff, but ultimately I will be talking through saving up to buy your first property, how much money you really need, picking a property, getting a mortgage, instructing solicitors, exchange and completion. And at the end I'll have some extra questions and some kind of miscellaneous small print and things that you need to know. So big disclaimer right up front, I am not a mortgage advisor, I'm not a financial advisor, and I'm only speaking from my personal experience. So in summary, I have bought a 2-bedroom, 2-bathroom flat with a parking space in London. Although the address is technically Essex, it is the London Borough of Havering, so I'm not just begging it, and this is an important detail which I'll get into in a little bit. It's a leasehold property. It is not a new build. It was built in 2006. I'm the second owner. I did not have to pay stamp duty as it was under the threshold for a first-time buyer. I didn't use a mortgage advisor or a mortgage broker. I'm the sole owner and occupier, and I have a full-time job. So, saving up. Saving up requires 3 things. Number 1, money to save. Number 2, places to save it. And number 3, sacrifice. I have saved money my whole life. Like, my mum calls me a squirrel because the way I move with money is like a squirrel. Like, I literally, I put some over there, I dig a little hole, put some over there, I dig some deep and come back to it next winter. I squirrel money hard. I would really recommend this in terms of like diversifying your portfolio. Don't just put all your money in one savings account. Try and get into some stocks and shares, try and make some actual investments, little tiny things. You can use apps like Nutmeg just to get you off the ground. I even think Monzo has a built-in investment kind of savings account now. But my key point is to diversify your savings. So for me, I opened a Help to Buy ISA, which I do not believe you're actually able to open anymore as of November 2019. But some people may have the ISA, so I'm just gonna basically talk through what I did and it may be relevant to those people. So with the Help to Buy ISA, you open it with £1,000, which I had saved in a flex saver somewhere else and moved it into the savings account to open it. You can put in £200 a month and it was a 2.25% ISA, which was just like an amazing, still is, an amazing interest rate in your savings account. And the perk of having this Help to Buy ISA, so not the Help to Buy equity loan, not related to Help to Buy properties, not related to share ownership, it's just an ISA, is that once you're ready to close your account at completion, the government give you 25% more of whatever you've saved. So literally like free money. And here's a little detail about why I'm not begging it to live in London. So my address is within the London Borough of Havering, and with that ISA there are basically 2 thresholds. So if you're buying in London, your property value can be up to £450,000, and if you're buying outside of London, your property value can only be up to £250,000. That's just to get the 25% bonus. In going down this route with kind of, you know, picking this ISA and choosing to put my money in it, I was kind of jumping ahead a little bit, but that did kind of influence how and where I was looking to purchase a property. That boundary with a 25% bonus is obviously because this is an incentive for first time buyers only. Another little squirrel method of mine was to move my money around. So in the last, I don't know, 2 to 3 years, I've changed bank twice, just my actual current account. So I moved from HSBC to Halifax, and I don't remember the incentives at the time, but I then moved from Halifax to Santander just around 6 months ago. And with the Santander 123 current account, you get 1% interest just on the balance of your current account. If you looked at the interest rates on savings accounts right now, that is pretty good. I think it has actually dropped since I've had the account, but I got that for at least 6 months. So earning interest on money that was on its way to being spent basically. With the 123 current account, you also get cash back on household bills, direct debits to certain suppliers like your energy supplier, things like that, your phone bill, and you also get cash back on your mortgage payments if your mortgage is also with Santander. So these might be perks that you want to start looking for and lining up. Like, I was basically starting to get my ducks in a row financially, not just saving, about 6 months beforehand. Another thing when it comes to saving, as I said, I am not a financial advisor, but do you know who is? My financial advisor. People always talk about like, why didn't they teach us this in school? How are we supposed to know about this? Like, I get that, but they did teach it like at university and at higher level, and people did attend. So pay those people, those knowledgeable people. If you're struggling to work out how to save or how to get into stocks and shares, investments, just ask someone, like pay someone to give you good advice. My last point on saving is about sacrifice. If you know me personally, you know I do not go out. I would love to go out. But going out costs money. Sacrifices must be made. Budgets must be kept. birthdays will be missed. Your friends will get over it. Literally every single one of my friends whose birthdays I've missed in the last 2 years, once I said I'd bought the flat, they were like, oh my God, I'm so proud of you, like congratulations. The fact that I had missed their birthday to bank that £200 night out for, you know, 2 months of energy bills is not a grudge that your friends are willing to hold. So for the last 2 years, I have literally managed every single penny I've had on various spreadsheets. But for the last, I would say 10 months, maybe a year actually, maybe a year. I've been using Patricia Bright's annual budget planner or something. She had a life before YouTube and it was in the finance sector. So she's kind of had a full circle moment and launched another YouTube channel whereby she's giving like personal development and finance advice. So on that channel, there's a video, I'll link the video below. She has loads of great advice about property because she too has a property portfolio, but there's one particular tool she has, which is this annual budgeter. Make the spreadsheet kind of adaptable to you, which is what I've done. So I will link that in the description. Next up, how much money do you need? More than you think, okay? More than you think. I cannot stress this enough. The cost of buying your own property is more than the price you see on Rightmove. Some of these costs are a bit personal to me in terms of like how much certain things were, but generally speaking, I'm going to give you as many numbers as I can right now and as many numbers as I'm comfortable sharing on the internet. A lot of these things are also dependent on the property value you're purchasing. So I'm just going to give a lot of percentages here, which you can calculate for yourself. Obviously, everybody's needs are different. So I just want to start with the property itself and how much money you do need of that Rightmove figure that you see. So paying for your property from that value that you see on Rightmove is a sum of your deposit, your mortgage, and any money that you need to bridge the gap in between these two figures. So deposits. Deposits these days are 5 to 15%. Literally as of last week, as I was planning and writing these notes, Nationwide announced that they are going to be taking a 15% deposit from first-time buyers in light of what's going on with the pandemic. I think also to do with Brexit and just the instability of the economy. Sorry, this is the first time you're hearing this. Bear in mind that deposits now range from 5 to 15% for first-time buyers. So the first number on your how much cash do I need list is 5 to 15% of that price that you see on Rightmove. From what I've seen and in my experience of searching, 5% deposits are attached to new builds, shared ownership, and properties attached to Help to Buy equity loans, so government schemes and other schemes basically. 10% deposits are what I was able to get more standard and across most main banks and lenders. And as I said, the 15% deposit is a new thing. The next thing on your cash you will need list is money for your solicitor. So solicitors' fees vary, and the product that you're looking for when you're looking for a solicitor is called conveyancing. So conveyancing is just a term for buying and selling property. So you'll need to instruct a solicitor or a solicitor's office at least that handles conveyancing. But my total solicitor's fees came to £1,400, but to get the ball rolling on day one, I had to give them £360 just for them to represent me. So that was my deposit. That did obviously come out of my total, but so cash you need on day one from when you make your offer and appoint your solicitor around £360 to £500. Next in the process, which we'll address in a minute, but is going to be a property surveyor. So depending again on the style and size of your property, I have bought a 2-bedroom, 2-bathroom, top 4 flat in a very small unit. There are only 12 flats in the unit. My survey cost me £360 as well. This was on the pretty low end of property surveyors. If you're buying a leasehold property, which I have, leasehold properties, for anybody who doesn't know, basically you are buying your flat. Like within your block, you are buying your flat. But what you do not own is the share of the land that the building is built on. In some cases, you can, when you're buying a flat, buy a percentage of the freehold. This does mean, however, that somebody does own the land that your flat sits on, and there is a cost associated with that. The document that your solicitor needs to arrange with their solicitor is called the Deed of Covenant. So in my case, the solicitors of the people who own the land that my building sits on are bougie. So as I've said, solicitors' fees range, and it seems that they have a very expensive solicitor. The pricing around this document is actually set by the other side. So they set the price for this document at £420. Literally when I saw it, it's one piece of paper. One piece of paper you need to sign, that is it. So my solicitors, who were really, really, really good, Law Lane Solicitors in Stratford, I will link them in the description, 100%, 10 out of 10, would recommend. My solicitors basically went back and were like, we don't even charge that much. Like, we don't charge that much. This is a first time buyer, you're taking the piss basically, and arranged that I would pay half of it and that the seller would pay half of it to get this basically document reassigned from them to me. So all in all, the deed of covenant cost me what it should have cost me. So from my experience, it's going to range between 160 and £200. £200 on the cash you will need list. Mortgage fees. So believe they charge you to borrow the money. Like, it's like there's a penalty to not have the money that you need. Like, so my mortgage fee was £999. This is pretty standard across the board, to be honest, if you take a mortgage with a mortgage fee. The reason it's kind of on the cash you will need list but doesn't have to be is because once your mortgage is approved and the property is yours, you have a 28-day, or I had a 28-day grace period to just pay that off. So you can just pay for the fact that I've had to borrow this money up front, £999. If you want to, however, and you don't have that £999 going, you can just add it to your mortgage. So the only problem with that is that you basically added £1,000 to your mortgage that you then will have to pay interest on. If you pay it off upfront, there's no interest. It's just £999 and you just pay it off. And that's kind of all the money that you need in terms of the process of buying. However, within the first 2 weeks of me owning the property, the following bills came. As I mentioned, I have a leasehold flat, somebody owns the ground, therefore there is ground rent. There is ground rent associated with the fact that I purchased a flat that lives on their ground. My ground rent is £230 a year, which is very, very reasonable. But, you know, the property was mine on the 26th of May and the invoice was due by the 23rd of June. In terms of blowing all your cash in the purchase, you can't, because these bills, they wait for no man. They wait for no man. Another bill associated with the fact that I've purchased in a block is service charge. Service charge and other small print around your building and living in it can really, really, really vary, and it does really matter what you're getting. So I'm quite happy to pay the service charge that I'm paying because I'm happy with the service that I'm getting for it. So my service charge is £1,400 a year. And when I heard that, I was like, okay, cool, it's whatever a month. But the bill didn't come like that. The bill came of, it's £1,400, please. And if you don't have it, then you need to pay half now and you have to pay half by December. So I paid £720 immediately within the first 2 weeks of buying it. So I'm adding that to my cash that you need list. Just something to consider. The last bill that came for me was the council tax. The previous owner already told them that she wasn't living there. So the day that I literally went there, the first day I went there, there was already a letter there saying, hello, new owner, new occupier. Council tax, again, it really, really varies. Depends on the size of your property, depends on your local authority. They use a process called banding. So you can choose to pay monthly for 10 months of the year, and then there's like an 11th month kind of bonus payment, or you can just pay all at once. So I have opted for direct debits, which will be monthly, and I've also applied for the single person discount. Because it will only be me living there, I get to pay less council tax. However, that first payment was £178. So within the first couple of weeks of me owning the property, I was £178 more out of pocket that was required in cash. So next up, we're going to talk about getting a mortgage, and I've kind of put this in the process before picking the property, which is true and untrue, and you might want to do these two things simultaneously or the other way around, but this is just the way that I chose to do it. So before you start looking for property, you need to get a grasp of how much you can afford. So to do this, the best way to do this is to get what is called a mortgage in principle. I chose to do this through free services. So there's a free mortgage calculator and service, which is kind of a bit like compare the market of mortgages. There are two actually, sorry. LNC and also Habito, whatever, links will be in the description. I use both of these services because exactly the same when you use like a comparison website for, you know, broadband, they do have access to different rates and different mortgages. So you fill out this questionnaire, basically all about you, your spending habits, blah, 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 and they give you a rough idea of how much money you can borrow and how many lenders will lend it to you. So you can kind of get a rough idea whether or not you're going to be pushed into a really small corner of the market, or if, you know, the world is your oyster and you'll have so much to pick from. So remember, paying for your property is a sum of your deposit, your mortgage, and any money required to bridge the gap. The mortgage and the gap. There may not be a gap. And this is kind of why I put this before picking a property, because I couldn't afford for there to be a gap. Like, I had to have all the money. So let's say, for example, the property value was £400,000, which, to be perfectly clear, mine was not. Your deposit makes up 10%, so you need £40,000 cash. You still have £360,000 to come up with. So you're okay, cool, I'm gonna go get a mortgage for the rest, right? Mortgage lenders typically lend you 4 to 4.5-ish times your salary. So let's say you earn 50k a year. To clarify again, I do not. You could borrow anywhere between £200,000 and £240,000. You've got your £40,000 deposit. Your bank is willing to loan you £240, let's say, top end, but you're still short 120k. And this is the gap. So when I was first shooting for the stars, thinking, yeah, I'm gonna buy this place, I'm gonna get this, I'm gonna da-da-da, pull out this form, da-da-da-da. They follow up with a follow-up call. So I was like, okay, cool. So how do I get the rest of the money for this property that I've picked? And they're like, oh, the guy on the phone, I kid you not, literally suggested to me that you take your parents somewhere nice for dinner and ask them for it. So once you evaluate how much you have saved equals 10% of your deposit. Work backwards with the numbers. Then work out what 4 to 4.5 times your salary is, add that to the pot, and that's your budget-ish. This obviously does increase if you're buying as a couple, as friends, as siblings. If there's more than one person's income, that person's income, like, together will be 4 to 4.5. So if you both earn £50,000 in that particular example, you don't have a gap. You can be offered more or less than 4 to 4.5%. Don't let that hold you. Obviously, it's also affected by the market itself. Your credit score, if you've never borrowed money before and have no track record of ever borrowing money, not even a credit card, they might even want to offer you less. The last point I have on mortgages is types of mortgage. So there are many. So I've gone for a 2-year fixed rate mortgage. The interest rate is 1.29%, which is amazing. And obviously I did actually start this process in February, so this was post-Brexit but pre-corona. Fixed rate just means that I will have that 1.29% mortgage and I'm just basically guaranteed to pay back a certain amount every single month for the next 2 years. So picking a property, this is kind of the fun part, kind of the personal part as well. So there's only so much advice that I can give. Like, just, you know, focus on what it is that you want. First thing I have to say is to remember your budget. Once you start viewing, and I can say this firsthand from one particular property I saw, it is so easy to think like, oh, it's a bit more than I thought, but I can afford it, I can afford it, I can afford it. Look at your cash you need list and remember how many things are percentage based. And every time you up the percentage of that little price that was on Rightmove, all of these little numbers that you might have had penciled a little bit lower go up too. Consider any works that be required. A lot of people go for the new build option because everything is beautiful and white and clean and no works are required. If you're buying a new build, consider sometimes the property that you're buying when you see a showroom that you're buying off plan. Typically that means that they haven't built it yet. So they're going to take your money to reserve. Buying a new build is like a whole other kettle of fish, and I really suggest you watch someone's video who actually did that. But from what I know and understand, you pay money to reserve the property before it is even being finished. You can then go on to pay your deposit and the process continues in a similar way to mine has. But just consider that if you are buying off plan and, you know, pre-build or reserving pre-build, that they are kind of in control of that timeline for you. And I've seen so many horror stories when I was deciding not to go down that route where the property just kept getting pushed back and pushed back and pushed back. And it is sad to say that right now in this current, you know, climate, buildings are not getting finished. A lot of people's money is having to sit there because they've already put so much into it that they can't go elsewhere. They're not going to lose their deposit money. If you are living at home like I am, it might not be a problem. But if you are living in a rental at the moment, you have an end of tenancy or things like that, you might be in a bit more of a hurry whereby this off-plan timeline is just not for you. Consider if you can actually afford to live there. There are some gems of properties out there, 4-bedroom houses for like under £300,000 and, you know, needs work, needs a new boiler, needs a new roof, needs a new whatever. But if you go for one of these bigger properties, just consider that every single bedroom needs renovating, redecorating, heating, cleaning. You know, all of these things cost money. Home insurance, which is non-negotiable, is a condition of your mortgage that the property has to be insured from the second it is yours. So for my case, I actually had to buy the insurance and like forward date it to the date when I knew I would be completing. So home insurance as well, when you're picking a property, if your property is above commercial property, be it a leisure centre, a Tesco, a restaurant, anything like that, your home insurance will be higher. Is parking important to you? How close is it to the station? For me, I have taken a 2-zone jump out. So I'm going from living in zone 4 to living in zone 6. This is an extra £50 a month for me on my travel card. I mean, what's a travel card right now because we're not commuting, but anyway. In the future, it will cost me £50 more a month for my zone 1 to 6 travel card. For me, that's fine. That's the price I'm willing to pay. The last point on picking property would be to see the small print of the property before you commit. So for my building in particular, it is strictly no smoking and strictly no pets. Next point, instructing a solicitor. So I touched on my solicitor a little bit already in terms of the cost. So it was £360 on day 1 and £1,400-ish total solicitor's costs. I would definitely say to pick one based on recommendations. A lot of the horror stories I've heard about people's total conveyancing process has been about the fact that their solicitors were awful. My solicitors were a dream. Estate agents, however, are pieces of shit. Things that a solicitor will ask for that you will need are just ID. You will need your last 6 months of bank statements. They're just basically looking for good spending habits, that you don't always spend all your money all at once, and that you have the money that you say you do in your bank account. So now moving on to exchange and completion is nearly hours. So your solicitor handholds you basically the whole way through this process and just does the work in the background and sends you things to sign like as and when they need to. Exchange is the exchanging of contracts, and this is where you, the buyer, solemnly swear to buy the property. And at that point is when you let go of your deposit, sit in your bank account, and you kiss goodbye to all the money that you've saved your entire life. From that point on, if the purchase falls through for any reason or you withdraw, that's your business and you lost your money. You have anywhere between 0 and 30 days to move from exchange to completion. Completion is the day you get your keys. I actually exchanged and completed on the same day, which I didn't know was a thing, and my parents reassured me it was a thing, so that's what happened. Your solicitors call you to say, we've done all the paperwork in the background, it's completed. Your bastard estate agents call you and say, we've got the keys, they're yours, here you go, come pick them up, and you have a brand new home. So my camera literally just died right as I finished speaking, so I'm just going to try and wrap up the next segment quickly because this has been like over an hour. So the last section here is just going to be like miscellaneous items and basically like small print. Coronavirus or not, your purchase like period is going to take you somewhere between 6 to 8 weeks, kind of like as standard. Your first mortgage payment comes out around 1 month after completion, so I completed on May 26th and my first mortgage payment actually comes out tomorrow, which is July 1st. You will have to have all the money to pay off your solicitors before they complete and give you the keys, so that's kind of why it was on the cash list. All of the things that I've said that revolve around cash do genuinely revolve around cash. These are not services that you can put on your credit card. If you are asking Bank of Mum and Dad for some money, which is absolutely fine, you will have to often prove where they've got that money from. So in the same way that you have to submit your 6-month bank statements to say, you know, like there's no money laundering going on here, I think there's probably like a threshold. I didn't do this, so I'm not really sure. So if they're giving you any money like at all, they have to at least have kind of written that they're gifting you this deposit. There's no way around this. If you try and get around this, you are money laundering. So just bear that in mind too. I think that's it. Like I have been writing these notes for like 4 weeks as the process has been going on. I'm gonna drop another video of basically the more expenses of the expenses from purchase to moving in. As you can see, or maybe you don't know because you've never really seen where I live, but I'm still at my parents' house. So there are a whole other heap of expenses and they haven't ended yet. A flat tour and you know, all the fun stuff that you get to do for the gram and everything when you purchase property. Right now, it's just spend, 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 spend. So thank you so much for watching. Please leave absolutely any questions below. There are a list of resources in the description. Subscribe, share with a friend, direct somebody who you know that's purchasing to this video. For anybody in the midst of their purchase process, I wish you the best of luck. For anybody who's about to start the saving and like knuckle down and get into it, I promise you, you can do this.